Hey everyone, in today's video I'm going to answer if AeroVironment stock is a buy. To answer that question, I'm going to look at its revenue, its profitability, its cash flow, and its valuation, and then answer if this drone company is a buy right now. And it's proving itself more useful lately as the war in Ukraine is proving out. Unmanned aerial vehicles are going to be essential in future wars as it can save lives. However, investors were a little bit disappointed in this company as it missed out on a contract opportunity with the US military for more sales. So it's an interesting company, innovative growth stock, but let's answer if it's worth buying right now. So you can look at on the screen, revenue has absolutely exploded, going from a little under 200 million all the way up to 540 million over the last several years. And I suspect that revenue will grow over the next several years as well. Although I will say that it's likely to be choppy. It may win a contract and revenue might soar higher, and then revenue might be flat for a while until it can secure another contract. And so it's risky, especially when you compare it with other stocks that serve military or like defense contractors, because they've got billions and billions of backlogs of orders, and you can tell what their revenue is going to look like for years and years into the future. That's not the case yet for AeroVironment, but it could have that kind of potential where governments can buy so much or want so much of its products that it can have backlogs and years of orders waiting to be fulfilled, which can make it a less risky stock, certainly less risky than where it is today. But that remains to be seen if it can build itself up to be that kind of a company. And when I saw this, it was a little bit troubling to me. I understand revenue to be choppy up and down. What I didn't like to see was the company's operating profitability being similarly choppy and certainly not demonstrating any kind of economies in scale here. What you noticed is revenue has exploded higher, but you haven't seen a similar growth in its operating profitability. It's been up, it's been down, it's been choppy, so you don't get a consistent increase in operating profit margin with revenue growth. Now, I suspect this will be the case longer term when the company kind of finds its equilibrium, but for now, it's still investing in new technologies. It's trying to get into bigger drones. Right now, it's more into the smaller and I guess you could say medium sized drones, and is trying to get into the bigger market for bigger drones, which can be more lucrative. And so I guess those investments in research and development, and that is pulling down profitability. And so it's not yet at a position where revenue is going to just lead to increasing operating profitability. The next thing I wanted to look at is cash flow from operations to sales. I mentioned earlier research and development. Many times, research and development comes in the form of stock based compensation to get the best engineers and the best talent in the world. Sometimes you have to offer them equity stakes or stock in order for them to be willing to really give you their energy, their imaginative efforts, and all of their skill. And so looking at cash flow from operations really removes that expense, the stock based expense, because it's a non cash expense, and gives you a look into the company's cash flow. And this sheds the company in a better light at a 2.11% cash flow from operations to sales. And it's been mostly positive over the last several years, reaching as high as over 20% in terms of cash flow from operations to sales. So looking at this metric certainly makes the company look better in terms of profitability and efficiency and effectiveness. So finally, I wanted to look at valuation, and the stock is not prohibitively expensive, trading at a forward price to earnings of 32. It's on the lower end of its valuation. As you can see, it's fluctuated over the last couple of years, but it's near the lower end of its valuation. It's traded as high as over 40 forward PE before and as low as close to 29, but it's on the lower end of that range, so it's not prohibitively expensive, especially when you think of it as an innovative growth stock with profitability and positive cash flow from operations. Still, I would not recommend this stock a buy just yet. I would wait a little while longer for the company to establish itself more fully within the defense industry before going into it, or for it to demonstrate better management of its profitability, of its expenses, to be able to deliver profits even when it's in a period of investment in new technologies to do that more effectively. So for now, I would rate this company just as like on the borderline between a buy and a hold. And so I wouldn't fully recommend this stock as a buy. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.